Welcome to Vistex's Investors Conversation Show. Today we speak to Crewstone International, one of the fund managers selected under the Dana Penjana National Program in Malaysia. Now with us is Ahmad Izmir Mujab, CEO of Crewstone International. Izmir, welcome to the show.
Thank you, Brian. Thank you for having me.
Now, Izmir, let's start by you giving us an overview of Crewstone International and your history.
All right, sure. Crewstone, we set up in 2011 as a consultancy firm before this. And before this, we've been raising funds in terms of government grants. And we've also been helping companies to get government incentives. So more towards late stage companies and a lot of foreign companies as well. And we partner them with local players or local suppliers to materialize the projects. So recently, I think in 2020, we were awarded, as you said, a Penjana allocation. We were one of the 8 fund managers that were selected by the Ministry of Finance. And we moved towards more of a VC style of operations. And now we'll be managing, I'm proud to say, a fund that is 150 million size fund. Combined with Penjana and a foreign investor as well.
Okay, and what is your mandate for this fund? What sort of companies are you looking for, and what sort of stage are you investing in these companies?
So we've been given the allocation of venture debt. So we are stage agnostic. So meaning we can go into seed, Series A, B, C, above. It doesn't matter. So in terms of stage, it doesn't matter. In terms of ticket sizes, it has to be, I think, 4 million ringgit. But anything above that, we will need to seek the government's approval. We are also sector agnostic, but in terms of Crewstone's mandate and our foreign investors' mandate is we are looking for projects that has the potential to receive the next round of funding, so we can realize those capital gains in the next round.
So in other words, so you say venture debt. So is it convertible debt then? So up to $1 million US or 4 million ringgit, and that's convertible debt.
That's right.
And is your geographical focus only Malaysia?
No, it's actually regional, Southeast Asia. As long as there's an economic benefit for Malaysia, meaning job creation, knowledge transfer, or a management team in Malaysia going to those overseas locations to provide some sort of benefit back to the country, because after all, the part of the investment is from the government as well.
Okay, so because you are sector agnostic, where do you see your deal flow coming from?
So we've been pretty different in the way we operate as a VC, because typically VCs would get the deal flows from the pitch sessions or these type of startup conventions. So where we've been looking for our deals are from government agencies, investment promotion agencies, simply because we feel that it's been pre-vetted by the government or another party. So we feel that the deals that are with Crewstone are more secure than the raw ones, we would call, because they either have received an incentive or a grant or some sort of approval by the government. So in that case, we would come in at the so-called second stage and have a look at what type of funding requirements they would need.
So in other words, and let me just sort of look at a crystal ball. The sort of companies that you would probably want to fund is somebody that's, for example, got a cradle grant already, that has probably needs the next stage of bridging before their Series A or something like that.
That's right, because we feel that there's a gap in the market in that sense, because I've talked to a lot of the amazing businesses that have received either ECF funding or cradle grants, like you said, or even from Malaysian Venture Capital, so MFCAP. So these guys have received the first round, but then suddenly they have problems getting the second round and the third round. So they created a lot of press. There's a lot of traction with the first round of funding, but suddenly it just stops. And I feel that that's quite a big trend, unfortunately, in Malaysia, where the companies get the first round of funding and then they didn't materialize to the next round. for whatever reason. So we're here to bridge that gap now. And we feel that it's a good gap to fill in, even from an investor perspective, simply because, like I said, in terms of security-wise, as you know, the VC term is always linked with risk. So
Yes.
they think we're a bunch of guys that go in and dump in money of 100 companies and hope 30 would make it. So we operate very differently from that. So we function more as a PE. Anyways, the terms are interchangeable. So we are more of not much of a risk taker in that sense. So we would prefer that other people have looked at those companies and we would jump in the next stage.
Okay, and you're right. There's probably a gap in the market in that way, and also it's interesting that you then sort of defined yourself as a PE/VC. Would that also mean that you would be investing in non-technology companies?
Yes, we're always open. Like I've said, we're sector agnostic. We are more than open to invest in non-tech firms. Of course, Malaysia is very strong in the technology side, but also because we've been doing a lot of things like manufacturing, which we're very strong at in the past. So I see that technology, as an example, technology and manufacturing can merge. For example, we can do manufacturing automation. So we would be looking into those type of emerging sectors where our country is developing from a developing country to a more developed nation. So we would like to ride that change as opposed to trying to jump the gun per se and try to go into tech like most of the people are going into now.
So you've taken a more conservative, cautious approach to investing. Could you give us some insights into some of your existing portfolio companies?
Yeah, some of the companies that we deal in would be in logistics. For example, we have a company in human resource management system, doing performance management system that's automated by AI. We have edutech, where we are looking at distributing payment cards, similar to Touch and Go, into Malaysian public schools, like most of the international schools in Malaysia are already doing. So as you can see, it's not the next, I would say what people think is the next Grab or, the next big unicorn. But we feel that these are more stable businesses that has a better prospect in the short run. So of course we are still open to those, amazing technologies like the super apps that's coming on board as well. But we feel that that's a bit more long term, and in those type of projects, we would rather be the bridge financing between, let's say, Series A and Series C. So we would come in at Series B. So that's our approach to the whole thing. So as you can see, our portfolio companies, it's a merge of the old world and the new world. It's always logistics and technology, or education and technology. So, but there's always that conservative element in there.
Have you had any exits already?
Yeah, so far we haven't had any exits yet. The project is still ongoing. As I said, we just converted ourselves into a VC and PE. Okay. So we're fairly new in the investment side of things, but obviously we've advised a lot of clients and bridged the financing. So at the same time, we are applying, I have to say this as well, we're applying for a license with SC, and that should be approved soon. Yeah.
What is that for?
There will be a private equity management company license.
Okay, so then what sort of deal flow are you looking at in acquiring this year?
So this year we're looking at a lot of post-pandemic rebound type of deals. So anything in agri-tech. So a lot of these sectors that suffered a loss or has been, going down and affected by the pandemic. Obviously, healthcare, everyone's talking about it. We're looking at vaccine distribution, possibly vaccine manufacturing to be part of that game, regionally or locally. Of course, other things that has been dormant before, such as retail, that's another big market. So converting a lot of the retail businesses into e-commerce. So that's what we're targeting, basically post-pandemic boom type of products.
Because you define yourself as a VC/PE fund, are you going to be a passive investor, or will you take a more active role in these firms?
So we a great question, actually. We would actually focus on more being a passive investor. We would like to manage the funds and the strategy behind the businesses, as opposed to, a lot of the other VCs are very hands-on. So our approach is we would like to find the businesses that's already on their way, as I said, to the next round or pre-IPO or even a listing. So we would work with the shareholders and directors to get there, as opposed to trying to change the way they manage the business. So we like to let the entrepreneurs, do what they do best, and we can do what we do best, which is to manage the finance and raise the money for them.
Now, and I can see your model very clearly now. It is essentially fairly low risk, and also it's more about investing in companies that have been around for a while. They've got stable revenues or guaranteed revenues via concessions or projects that are already given by the government. And therefore, you provide that bridging finance to give them more runway so that they can get that big round of funding. And then will you exit at that point?
Yeah, we may partially exit at that point, but let me explain and justify why we chose this route. So obviously, it's not just a strategy that we chose to be different. I think as VCs or PE or fund managers, it's important to reflect the views and the mandates of our investors. So I feel that most of our investors, or at least the ones that we've talked to, this is exactly what they're looking at as well. Because of the pandemic, people are getting a bit more conservative. Investors, are looking at alternative type of investments or even safer investments. They might just go to the public market and get a better return. So why risk it? But at the same time, during the pandemic, people are looking at fire sales and discounts and things like that, which are actually high risk. But the risk must be mitigated. So they've communicated this voice to us and said, look, we may take the risk if there's a good discount somewhere in an investment to buy an investment, but at the same time, you have to be fairly careful. So we're trying to merge the best of two worlds, basically, trying to find that super deal and to be safe at the same time. So that's why we've gone with that approach.
Now, you've got Bradbury Asset Management as your key partner and investor, and they've committed to do, correct me if I'm wrong, up to 150 million in investment. Now, could you elaborate on the type of projects which they would be investing in together with you?
So Bradbury Asset Management is an asset management company out of Hong Kong. And they've been around for a while, and they're very big in the game in Southeast Asia. So we're lucky to have them on board, and they would like to focus on a lot of the electric vehicle scene, and possibly bringing some projects from the region into Malaysia. And we're discussing about how we can work with the government in terms of a private-public partnership by ways of getting some grants and incentives for them to set up a manufacturing facility for the parts, either the battery side of things or the parts for the electric vehicles. So that's basically one of the big deals that Bradbury is focused on.
And that would obviously be very much in line with the government's strategy of promoting this. In fact, in the new Malaysian Automotive Master Plan, which is about to be announced, I think in the next few weeks, EV is really the cornerstone of that next strategy.
Yeah.
Now, what do you think in terms of the calculations, what has Bradbury calculated in terms of the multiplier of this sort of investment in terms of creating jobs and the economic impact on Malaysia?
Great question, because that's one of the things that we're looking at to contribute to the company through the Penjana initiative. And that is actually one of the mandates by the government, is to create jobs. So I think we have a target of creating 1,800 jobs in total for the whole allocation of Penjana. So we'll be, trying to get to be part of that number. Obviously, we don't know exactly how many jobs we can create. We would have to look at how many jobs we need first, and the talent that we have in Malaysia. But the other side of things is the economic benefit, because it's important to note that when we set up a manufacturing plant here, 80% of it we target to be an export market, meaning bringing more income to the country. So not just jobs, but obviously other economic benefits such as direct investment and tax income for Malaysia as well.
Now, there's a lot of money out there globally. With all the stimulus, there's a lot of venture capital funds, PE funds looking around. And if you're a really good company and you're looking for funding and stuff, there are a lot of options. If I was an entrepreneur, why would I pick Crewstone?
Well, that's a great question because the thing is, with us, we're very realistic with the advice that we give the companies. And I always advise companies like this. Basically, you need to know what the investor wants before you even approach them. So if you have, let's say, what I'm trying to say is you need to know what the market wants. So if you're an entrepreneur and you already have a product, instead of perfecting the product as you think it might be perfect, you might as well talk to the investor and say, excuse me, VC or PE, what are you looking to invest in the next 2-3 years, or even next year, or even now? Then you would come back to your drawing board and try to tackle that interest by designing your product to fit that investment mandate. I feel that will be the easiest way to secure investors. So we would advise them something direct like that, and we would also match them up with funds that has very clear goals, hurdle rates. We'll give them the information in terms of the requirements, the detailed investment mandate, the financials, and the way that these investors would analyze an investment in detail. So other guys would just bring them to meet a potential investor, let them pitch, and that's it. If they make it, they make a cut out of it. That's not what we do. We would take the business under our wing. We would make it as though it is ours when we work with these guys, and we will pitch to our investors. So it's different. We don't bring in the entrepreneur until the very last moment, because they just, at that point, it's a done deal already. That's why you should, I think, pick Crewstone.
Okay, so it's interesting, Izmir. So essentially, not only do you have your own funds, you are sticking to your original business that is from 2011, which is the venture matching. So those aspects are still there. So in other words, if a company comes to you and this is not within your remit, they may want more money than your $1 million hurdle, or it may not be quite the right fit for you in terms of your risk appetite, you then will be able to then work with them and channel them to the right sort of venture capitalists that would be looking at companies like that.
Correct. That's exactly right. And that's why I think when you ask that question, whether we've had any exits, we haven't for our own funds, but we've had a lot of amazing stories where we match these guys with a big investor.
Give us some examples of successful deals that you've done that you've matched with big investors.
So it's worth to note that actually one of our chairman, actually one of our board of directors, who is my mom, she used to work for the Malaysian Investment Development Authority, which is an investment promotion agency in Malaysia. Yeah. So just for your viewers to know, I'm sure you know. So what we did was we just matched a lot of companies, and one of those companies after she retired that we worked on was PKT Logistics. Okay. And that was about 6-7 years ago, or even more. And today, after getting the funding rounds from Japan, such as some of the investors are Daiso and Mazda Logistics that we put them together with, they are now a 2 billion ringgit company. Their revenue last year, I think, is about 600 million, and it's a highly profitable company. So they have over 800 employees. So that's one of the best success stories that we've had.
Yeah, absolutely. PKT Logistics has just grown, and I'm familiar with that because that was one of the first manufacturing companies or logistics companies in Malaysia that all communicate using Facebook.
That's right. Yes. A friendly company.
Yeah. So it's quite an incredible story, actually. So okay, you're part of that very successful story, PKT Logistics. Now, what advice would you give them? So given this scenario now, there are a lot of in Malaysia, as you identified, the gap in funding is there. So they get initial funding. They either do an ECF round, so equity crowdfunding, or they basically go and use peer-to-peer lending, for example, to get some funding. They get a grant from Cradle. So these are all the various options, Cradle or MDEC or some of the other funds like that. And then they need to look forward. What sort of timeline should they be looking at in terms of their fundraising? So if they're looking for funding, what are the things that you would, best practices that you would recommend entrepreneurs?
So the thing is, a lot of people don't realize, especially the startup entrepreneurs, funding is just as hard. Getting funding or securing funding is just as hard, or actually even harder than getting your first sale. So because you would have to convince the investor on all aspects of your business as opposed to just your product. So you have to convince investor about yourself. You have to sell yourself. You have to sell your business. You have to sell your history. You have to sell your future plan. So it's a complete 360 of X-ray of your business. So this takes time. It takes time to build a relationship with an investor, to make the investor comfortable with you. It takes time to make the investor understand and be passionate about your business as you are as an entrepreneur. So I think entrepreneurs shouldn't rush the process. I think it's just like it's like dating, right? So you can't just ask the question and propose your partner if they don't get to know you first. And I think they have to take the similar approach with raising funds. And because the problem that I see is that a lot of people, they see an investor, they pitch the product, and then they ask the detrimental question, yes or no, do you want to invest in me? I need to know by tomorrow. If not, I'm going to another investor. Then the answer from the investor would be, yes, we don't have time to evaluate it. Yeah. Take it slow and relax, because the ones that do it well really take their time.
Yeah. What for Crewstone International now? What sort of capital do you need to deploy in the next 12 months? What's your target?
Okay, in terms of the Penjana Fund, we would need to start investing immediately, actually. We have a deadline of July or August to be able to deploy or make the first capital call. So now it's also worth to say that Penjana gave us an allocation of 20 million ringgit. We secured 150 million ringgit via Bradbury. So I like to say that we oversubscribed the fund by 7 times, which is great. So we would have to deploy this amount within the next year, as soon as possible, basically. Yeah.
Okay. Now, any final thoughts, Izmir, before we end this conversation?
Just to address to the entrepreneurs, because like you always bring them up, and I think we deal a lot with the entrepreneurs as well. I think a lot of people feel that during the pandemic it's a bit more difficult to raise the funds, and I understand that everybody's having a hard time. But I think you should not give up as an entrepreneur, because we've all been entrepreneurs in this space in terms of the VC and PE space. And there are opportunities, there are diamonds in the rough in terms of where the funding sources might be. It may not be in the same place as the banks or the equity crowdfunding side of things, but there are a lot of hungry VCs and PEs, such as us, that would be more than happy to look at amazing deals that it might present. So I think even though we're under movement control or the MCO, you should, literally get out there and talk to as many investors as possible safely, without breaking any SOPs, and try to raise the funds that you need, especially now, because there's a lot of frozen capital right now.
Now, Israel, thank you very much for taking your time to be on the Investor Conversation show.
Thank you. Thank you, Brian.
Now, I'm Brian Fernandez, and I've been speaking to Ahmad Izmir Mujab, the CEO of Crewstone International, on BizTech's Investor Conversation show. This video will be on our Facebook and our LinkedIn sites, as well as our website, www.biztech.asia. Please subscribe and like our various pages. Thanks a lot for tuning in.